What's up, everybody? Welcome back to Acumen BTC. It's your host here, and we're diving deep into Bitcoin's pulse for the week of June 22nd to June 29th, 2026. If you're feeling a bit of a chill in the market, you're not alone. Our Fear and Greed Index is flashing extreme fear at a measly 12, and Bitcoin's price has taken a bit of a dip. But is this a time to panic, or is it setting us up for an incredible accumulation opportunity? Stick around, because we're going to break down all the on-chain data to give you the real picture. This week, we're seeing some serious fear in the market, with Bitcoin taking a significant hit. But what's really interesting is how the long-term holders are reacting. Are they selling into this weakness, or are they seeing it as an opportunity? All right, let's get straight to it. So Bitcoin this week closed out at $59,500. That's pretty much a 7% drop over the past 7 days. Now, for some, that might feel like a punch to the gut, especially after the volatility we've seen. But remember, in crypto, these kinds of moves are par for the course. It's not about 1 week's performance, it's about understanding the bigger picture. And that's exactly what we're going to do with our on-chain metrics. Now, let's talk about where we are in the grand scheme of things. Our Acumen BTC market cycle score is currently sitting at a low 21 out of 100. This puts us firmly in the accumulate zone. What does that mean? It suggests that, historically, these are the times when smart money starts looking to build positions, not sell them off. And this aligns perfectly with the Fear and Greed Index, which is flashing extreme fear at a score of just 12. When everyone else is scared, that's often when the best opportunities arise, wouldn't you agree? It's a classic contrarian signal. Okay, let's get right into it. Today, we'll analyze the net unrealized profit and loss, the market value to realized value Z-score, and Bitcoin's supply in profit. Then we'll dive into what long-term holders have been doing. And finally, we'll look at the latest institutional data to put everything into perspective and see what it tells us about the market this week. All right, let's break down the on-chain metrics, because this is where we start to see what's really happening beneath the surface. First up, the NUPL. This metric tells us the overall unrealized profit or loss in the Bitcoin network. A high NUPL value means lots of people are in profit. A low one means more are at a loss. This week, the NUPL is at 0.115. Last week, we closed at 0.172. This weekly value puts us in the hope-fear zone and very near a capitulation sentiment with a weekly delta of minus 0.057, indicating more people are moving out of profit. It's important to keep a close eye on this metric over the coming weeks and months, because if it falls below zero, it has historically marked one of the best buying opportunities for the years ahead. It's definitely a key level to watch and not one to overlook, especially when combined with a solid dollar cost averaging DCA strategy like the one featured in our Smart DCA dashboard. Now, let's talk about the MVRV score. This compares Bitcoin's market value to its realized value, helping us identify periods of over- or undervaluation. Basically, this metric compares Bitcoin's market cap to its realized cap, what people paid for their coins, and normalizes it by standard deviation. It identifies when Bitcoin is extremely over- or undervalued relative to its historical fair value. It's currently sitting at 0.24 in the neutral zone, with a weekly drop of minus 0.1. Very close to a deep accumulation value, but we are not quite there yet. It's also very important to keep a close eye on this metric over the coming weeks and months. If it falls below zero, it has historically marked one of the best buying opportunities for the years to come too. Next, we want to have a clear picture of the percentage of circulating Bitcoin that is currently sitting at a profit. As we all know, when Bitcoin's supply and profit drops below 50%, it has historically marked an optimal accumulation zone. It's a direct measure of how much of the market is holding coins at a profit. The week closed at a value of 47.1%, meaning fewer coins are now in profit. So to sum it all up, what we've seen across these last three metrics is that the market is currently in a period of elevated stress, selling pressure, and disbelief. sentiment that's very typical during phases of low interest and market apathy. However, the on-chain data seems to be telling us that we're getting very close to that key accumulation zone, although it still looks like the market may need one final push before getting there. Overall, it definitely appears that a market bottom is beginning to take shape. Okay, before we move on to the long-term holders metrics and institutional data, I want to take a quick moment to review this chart of Bitcoin's realized price. As we all know, when Bitcoin's price drops below the true market mean, it means we're under a bit of selling pressure. Over the last few months, since January 2026, we can see that Bitcoin's price has dropped below the true market mean, slightly approaching the realized price, sitting at $52,800. This is very important because, as we remember from past cycles, when the price is situated between the realized price and the delta price, we are practically marking the market bottom, or very near. At this point, the on-chain data continues to point toward a potential move lower before the market finds meaningful support. It is important that we keep monitoring this metric to see what will happen in the coming weeks. Okay, now, the big players. Let's head now to our institutional intelligence dashboard. Let's check out the long-term holders, the investors who tend to accumulate through volatility rather than sell into it. That's what makes their supply such a powerful measure of long-term conviction. This week, long-term holder supply climbed to 16.66 million bitcoins, increasing by another 16,874 bitcoins over the past week. Despite the price drop and the extreme fear in the market, these experienced investors are not selling, they're accumulating. This is a powerful signal. It suggests that those with a long-term perspective are viewing this dip as a buying opportunity, strengthening their positions rather than capitulating. So, basically, when long-term holder supply rises, long-term investors are accumulating. It's bullish. When it falls sharply, they are distributing to short-term buyers. Late cycle. Currently, long-term holders control more than 80% of Bitcoin's circulating supply, a strong signal of long-term conviction. Moving on, let's take a look at institutional activity, specifically the Bitcoin ETFs. They provide valuable insight into how institutional capital is moving in and out of the market. Institutional activity continued its trend of net outflows, with a substantial minus 25,426 bitcoins leaving ETFs this week, bringing total holdings to 1.46 million bitcoins. Breaking it down, we saw some pretty substantial outflows. IBIT, BlackRock's ETF, had outflows of 9,495 bitcoins. Fidelity's FBTC saw 3,953 bitcoins leave. ARKB from ARK Invest was down 1,328 BTC. Even GBTC, which has seen outflows for months, was down another 543 bitcoins, and BITB down 346 BTC. So, what does this tell us? It suggests that institutions are either taking some profits off the table or they're reacting to the broader market uncertainty and the recent price dip. It's a clear sign of institutional selling pressure this week, which contributed to the overall price decline. However, it's important to watch if this trend continues or if institutions start to re-enter at these lower prices. And that's it for this week's on-chain analysis. If you'd like to explore these metrics in more detail, head over to acumenbtc.com. Inside the Intelligence Room, you'll find all of these metrics updated daily, along with our AI-generated weekly market brief, portfolio tracker, and a growing suite of tools designed to help you better understand Bitcoin's market cycles. The link is in the description below. If you found this analysis helpful, be sure to like the video, subscribe to the channel, and turn on notifications so you never miss our weekly updates. Thanks so much for watching, and I'll see you in the next one. And as always, please remember that nothing in this video should be considered financial or investment advice. This content is provided for educational and informational purposes only. Always do your own research and consult a qualified financial professional before making any investment decisions.